Hi CA students, let's revise CA Final AFM, Chapter 8, Mutual Funds. Question 8. A mutual fund co has the following assets under it on the close of business as on 1st February 2012 and 2nd February 2012. And they have the assets they have is in four companies. So number of shares and then market price is given, market price and for 2nd February and 1st February is given. And they told the total number of units is 6 lakh units as on those dates. Now calculate net asset value of the fund. So first we have to calculate for 1st February 2012. So 20,000 multiplied by 20 and then 30,000 multiplied by 3112 and 20,000 multiplied by 361 and 60,000 multiplied by 505.1 will give us the total net asset value divided by the number of units will give us the NAV per unit of the fund. So which is coming up to 78.84 in our case. The second requirement is assuming one Mr. A submits a cash submits a check of 30 lakhs to the mutual fund and the fund manager of this company purchases 8 lakh shares of M Limited and the balance amount is held in bank. In such a case, what would be the position of the fund? So 30 lakhs a person Mr. A is investing and the fund manager of this mutual fund company is telling the fund managers to purchase 8,000 shares of M Limited. So 8,000 multiplied by this 312.4 will be around 8,000 multiplied by 312.4. It is around 24 lakh 99,200. The money invested is around 30 lakh. So balance is left in the bank as they have told. Now the new assets which are added is 8,000 shares of M Limited and cash balance available in the bank. These are the two assets which are added. Okay, now the revised position of the fund they are asking. So the same shares we will be multiplying with the same 1st February price, but in M Limited 8,000 shares got added and cash there is a balance of 5 lakh. Adding it up, the net asset value will become 5 crore 3 lakh 2,000. From 4 crore 73 it became 5 crore 3 lakh. Now this is the net asset value, but the base also changes because we have got some new shares, right, and new assets got added. So the number of units also will change, but we can't directly take the price here and then add this 8,000 shares because that is wrong. We have to find out the number of units of the fund, which will be in the previous NAV per unit. We found out that the price is 78.84. So the new amount 30 lakh invested divided by that 78.84 will give us the number of units that got added, which is coming up to 38,053. Now this plus the previous 6 lakh units, so 6 lakh 38,053 is the current units that are available. Now that is the funds that are available now. Okay, now the revised NAV also we can find out by dividing this NAV with 6 lakh 38,053, which will come up to divided by 6 lakh 38. It will be again the same thing because we are taking the average of the previous number only, right? So whatever ideally, so here we have added that 30 lakhs amount, right, to 24 lakh 99,200 and then 5 lakh here. So from this 4 crore 73, 30 lakh got added here and the 30 lakh again we divided with the same previous NAV per unit. So obviously the revised NAV the value will be same only, there is no change. Now find new NAV of the fund as on 2nd February 2012. as on 2nd February, we know the new prices, and even the position of the fund also changed. So whatever the revised position, we have to take that, multiply with the 2nd February prices to get the new NAV of the fund, which is 5 crore 24,86,800, and dividing it by the units we have, 6,38,000 will give us the new NAV per unit. Here the value has appreciated because of the changes in market price in each of the asset. Hence the NAV also will change from 78 to this 82. But in the previous case, just some new assets got added with the existing same market price. So hence there is no change here. That's it. Thank you.